Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Yo, yo, yo. Welcome in.
Hey, folks. Here we are. Believe it or not, live and in person.
All right. All right. So
as we always say, if you have any questions, hit us in the comments and we'll do our best to get to them. And we're going to be talking about this magic number 6164. You know, Brian, it reminds me years ago when I was doing natural gas and doing physical, and we were looking at doing hedges, and natural gas just shot up from like $1.50 to $3. And our main guy who did our hedges looked at me and says, "You think we'll ever see $2 again?" And within 3 months, we were trading at $1.25. And he looked at me and says, "Do you think we'll ever see $2 again?"
It all depends from perspective. It all depends from perspective.
And I said, "Absolutely, but don't ask me when."
Yeah. Well, you want to know something crazy is I was just looking at this. So in January, we were at $80 crude oil. WTI was trading $80. Now we're down to 57. Yeah. So there's a lot of reasons why. We're going to unpack some of that, but today we're really going to focus on why $61.64 on oil. It matters for oil and natural gas, and it could change everything this week. So it's the line between profit and pain, and it just got drawn, and this is what we're going to talk about. The markets are in full panic mode. Crude dipped below $60. Brent hit a 4-year low. Natural gas plummeted before rebounding. And the global recession fears are here, and traders are scrambling for clarity. So 6164 came. It came on Monday. And could we reclaim it and the bulls retest $66? We're going to go through this presentation. Then we're going to kind of do a tutorial and kind of talk a little bit about why $61.64 matters. And there is a key metric that we're going to talk through that has to do with production, and it has to do with oil prices. It has to do with natural gas prices and everything in between. So the bull bear pivot line, that's the line in the sand, is $61.64. That is a technical level. However, when we look at the financial fundamental side on the oil supply side, that matters a whole lot. And if we break it, we're going to free fall to 57.35 and 53.87. So those are the levels. Those are the technical levels that we're looking at. So why does 61.64 matter? Why does it matter, Bill?
First of all, when you look at the charts, there's a gap there, and traders don't like gaps. So usually the market goes back up to wherever that gap is and tries to fill it a little bit. And so that's where you're looking at 61.64. But also when you go backwards, I believe that's where we've been bottoming out for the last two ones. Has it been last two when we go back?
No, actually 66 is really the line in the sand. If you look back in time, 65.
Oh yeah, we'd have to go way back for 61, won't we?
Yeah. 65, 66. So when we broke below this $66 level earlier this week, it has opened up this, and this is part of the reason the line in the sand actually exists at 61.64. So feel free to ask questions here, folks. Just tap it into the comments. I think we'll see them all. Hadn't seen any questions from X lately, but from LinkedIn and YouTube often see that. But as Bill mentioned, there are gaps. But 61.64, what we're going to talk about today is it's setting the tone for global commodities. There's a macro sentiment that spills into natural gas. So this is an interrelationship that some people miss. When crude goes down in price, that could actually be bullish for natural gas. And when crude goes up, that could be bearish for natural gas. And there's some fundamental reasons why, and we'll dive into that a little bit later. But there's a market psychology around a $60 crude price and a $50 crude price and a $40, and back to January an $80. So when we look at the fund flows and the positioning, it hinges on confidence. And if you actually track, Bill and I were just looking at this. So this is based on yesterday's close prices. You can see that we have an increasing amount, how much crude oil is. I'm kind of flattening that says 25, 26 are the same price, but then we have an increasing price over time. If you go back 2 months, you would see the front month trading out here, then 2026, 2027, 2028. We had a decreasing price over time. So what that generally means is that the market believes crude oil is undervalued right now on a holistic basis.
So using the terms, before we had a backwardation look, now we have a contango look. And so, and that's a significant change, but it's because the front months have dropped. If we'd have to go back and look, I really don't think 2030's changed all that much in its number. It's just that the front months have come back down. And despite what you hear on the show Landman, where he says that, I don't know if you remember seeing that, his quote is that between 75 and 88, we still make a bunch of money. Well, we're a long way from 75.
Oh yeah, definitely.
So,
well, and what's interesting here is that natural gas has created the opposite shape. That was actually, we have a decreasing
not into
price.
backwardation, yeah.
Yeah. And if we went back a couple of months, we would see the same thing where we had an ascending price. So the markets have really shifted a lot, and that is actually one of the things that we're going to talk about there. But what we're really trying to talk about is there's a trading view of this, which is the charts and the gaps. But what we're going to talk about today is we're really going to talk about the fundamental side. And I once missed a level like this once, and it really cost me, ignoring a major bull bear line. The market reversed and lost a month's profits. Never ignore major pivots again. That's the lesson, is just because something is going into a price and it's new, it doesn't mean that it's not going to go back. It's not going to go forward. Every month is every day is a new trading day. So
bottom line is, it doesn't matter why. We spend our lives trying to figure out why, but it doesn't matter why you don't get run over by the train.
Yep. And here's what happened the last time we broke 61.64. And as Bill and I were talking about, we got to go back kind of a long ways. When was it?
2020.
Kinda. Yeah, this was back in 2020. So that was actually when we broke down because of it. And of course, 2020 had a complete case study around what happened. But the last time that happened, it triggered panic selling. We had a capitulation candle, which is a particular kind of technical candle. You can look it up. We're not going to go into a lot of the technical analysis side today, because we're really going to focus on the fundamental side. Why 6164 means something for both natural gas and crude oil. And then they retested the rejection, and then they reclaimed it ultimately. So natural gas traders, you're not off the hook either. Gas bounced off 367.9, continued down. This morning, I think we're down to, what is it, 350? What are we at?
Yeah, 350.
352, yeah.
Yeah.
Which is something
But you're seeing basis tighten right here too, also, because I was noticing cash prices yesterday with a 350. We were in 330 here in Oklahoma in mid-continent, which is about 330. So that's a pretty tight basis for mid-continent.
Right. But natural gas sometimes follows, sometimes goes contrarian. And we're going to talk a little bit about why natural gas does react to the broader sentiment, and a bounce in crude oil equals a risk on tone. So crude oil is kind of spilling over into all the equity markets, and why these levels matter. These are turning points. If you ignore 6164, you could miss the move. The move could continue further. It really depends on how this week trades out. So watching where we end this week. And listen, to help you on your journey, there's a link down below. We have a free Energy Traders Toolkit. So you can sign up for that today, and it's going to give you key support and resistance levels on crude oil, natural gas, and it actually will enroll you in our email course, which is going to give you more bonus content and more information about how to organize your thoughts if you're trading natural gas, if you're trading crude oil. None of this is financial advice. We're not financial advisors. Please see your financial advisor, yada, yada, yada. Read all the disclaimers below, right?
And by the way, if you lost money this week, you can get it now while you can afford it, because it's free.
Yeah, so there's a link down below. It's a completely free resource for you. It's the Energy Traders Toolkit, something that we put together, and we thought about charging, but we're not going to do that. So listen, why does 6164 matter? Well, when you look at crude oil, when you look at natural gas, when you look at supply and demand, there's two attributes that many people miss. Bill and I have been in the energy industry for a long time, so we're very familiar with this. When somebody drills a well, the first month of production, month 1, say they're producing up here. By month 12, the production that comes out of that well, whether it's gas, whether it's oil, is a lot less, and in many cases 70% less. Or said a different way,
specifically for sure in the shale.
Yeah, or said a different way, by the end of 12 months, you're only going to have 30% of your supply available.
You got 1,000 barrels a day coming out, you're going to have 300 in a year.
Yeah. So what this means is that if you don't replace it, that means production will always decline. It will always drop in value. So something that we track over here, it is in our product Rogue Edge, which if you're interested in that, you can click the link down below and learn some more about that. But what we actually do is we take each commodity and we take a look at, let's just take crude oil from new wells. So this is a monthly chart showing how much new production we're having. And if you can look over here, you'll see about 700. It's just shy of that, about 680, something like that. So 680,000 barrels a day was added. What was the last month? February. March should be coming relatively soon. I think that comes out in like a week or so. So 680,000 barrels a day of new production was added in February. Okay, that sounds like a lot, especially when we have 13.5 million barrels a day. However, we declined by over 650,000. So right here, we declined by 650,000 barrels. So what that means is that the delta, say we added 680,000 barrels a day, you subtract 650. So that means we grew by 30,000 barrels a day. Now, this is why you track rigs. This is why you track new production, because if that engine slows down, which it is kind of starting to slow down. If you look at this right here, we hit just over 700 and we're down to 680 in February. So that engine is slowing down. So new production is slowing down. And that's at the same time that our declines are staying flat. So add those together. What do you get? You get modest growth, about 40,000, 40,000 barrels a day. Now we go a little bit deeper. We go into each commodity region, Permian, Haynesville, Eagle Ford, Bakken, Appalachia. We go into those different regions so that we can take a look at those regions independently and see. But one thing I would say, the Permian is already in a downward trajectory, and that is before these prices.
Right.
So we are already decreasing.
I was looking at the rigs today, Brian. I was looking at the rigs today. We have a total of 597 rigs operating as the last report, and or 592. 297 of them are in the Permian. So half of the rigs running are in the Permian.
Yeah. I mean, and we can look at it right. Let's see, right. Let's go ahead and pull it up in a different screen, make it simple. And if we look,
and by the way, that 30,000 barrel increase is equivalent to 0.2% increase.
Yeah, so this is a monthly frequency. We have a monthly and a weekly frequency because we keep track of that rig count. But you can see that we've been pretty flat for most of 2004. So what that or most of 2024. But what that means is that the rate of production in the Permian is dropping. And that means a couple different things: fewer rigs, fewer wells, also productivity of those wells, because not every well is the same values. And so that is part of the reason that we say 61, 64 matters, because once you drop below there, so many wells are now uneconomic, which means the growth engine that previously was there is not there anymore. So we are going to see a massive contraction in the volume that we get from new production. So that is part of the reason that we say that.
What that also translates into is a lot of production in the Permian has a lot of associated gas with it. And I think that's about what you're showing right now, isn't it?
Yep. And we can see that same trend where we were adding 350,000 decatherms a day back in 2024, but we're now down below 250. So what that means is we're actually in base decline. If you add in all the regions, you can look at it right here. So what this means is that natural gas, we may have some weeks up, some weeks down. This is a monthly frequency. This comes from the EIA drilling productivity report, and this indicates that we are just treading water in natural gas. So natural gas is likely to tread water, and crude oil is likely to decline. So what that means is that we ultimately are going to have upward pressure on crude oil.
One more aspect on that is that means liquids will decline, which means it's going to have an impact on plastics.
Yeah. Yeah. Well, all this is going to spill over into so many different aspects of the energy market and of the market overall. So a lot of these are really going to be big ones. But this.
So what you're saying is that right now we should go out and fill up every car we have. Because gas price should be coming down. I noticed it was in the 240s already here.
Well, I will say I do have an opinion on diesel. Diesel, I think, is way undervalued right now. and gasoline has dipped below $2, and I think we're likely going to be lower for longer, which means we are totally set up for a recession, if not depression. So that's what's happening. We're yeah.
You were serious about that?
So anyhow, that's kind of my take, is that we're set for a recession. We are having a little bit of a rebound right now, just getting up over 58. It's trying to get back up to that 61, 64 level, because we are approaching the close on NYMEX today. So that's
Right.
that's what that's my 2 cents. So anything to add on that, Bill?
Well, I think also that, nothing's ever going that direction forever. So what you got to be able to do is be prepared to pivot if you need to, but have the information available to you, so you're not pivoting off of emotion, but you're pivoting off facts.
Right.
And that's the biggest problem that is that we have a lot of people who want to trade off what they think they know, as opposed to what they can actually put actual facts on that. And I can see most of what we're doing is recessionary. I don't think we're going to go all the way to the depression, because I just don't think people are going to allow it. I mean, there's too many things that can happen. And so that's where I'm at. And I think everything's short term.
Right.
And so
Right.
be paying attention to what's going on, and look at it and see if it's an anomaly or a trend. That's what you've always got to watch for. Is it an anomaly or a trend?
Well, there must be some news
And I think
coming
what we've
out.
got right now, there's always news coming out. There's always news coming out. And
some news turned around. Natural gas
Yeah.
just went up 15 cents, and crude oil has just gone up like probably like $1. So, and there's nothing hitting the wires yet.
That sounds like European news, doesn't it?
Yeah, I mean, there's nothing coming out right now. This was 30 minutes ago, but let's look at the
Yeah.
equities. The equities are back up. Let's take a look and see what news is coming out there. Treasury auction, the Fed's Q&A. So maybe this is pinned to the Fed's Q&A. So this might
On the
be
interest rate?
this might be a reaction to interest rates. Obviously, we're going to find out in the next hour or so what that is. But if you have questions, drop us a line and let us know. But I think that's where we're going to leave it. So again, sign up for the free resource down below, which is going to be the Energy Traders Toolkit. That is going to give you the blocking and tackling of what things you should evaluate and look at if you're going to trade in energy commodities. So download that below. You just follow the link and enter your email, and off you go.
So if you're on YouTube, be sure to subscribe. Follow us on LinkedIn. Hey, listen, if this is important to you, if these prices are important to you, you need to be a subscriber of Energy Rogue. It's a little bit of money invested for a lot of information shared.
Yep.
And you will, and I promise you, we don't sign you up for a year. We sign you up for a month. If you don't like it, you can send us an email and tell us about it, and then stop using it. But I promise you, once you start seeing what all it can do for you, it'll be the best money you spend.
Absolutely. So
if I didn't believe it, I wouldn't be saying it.
Right. Well, it is part of the reason we spent so long in the energy industry. We built this so that we could democratize the information and really give a resource to people outside the energy industry that trade the energy industry, that consume, produce. And we're starting a movement. If you want to be part of that movement, sign up. If you don't, that's totally cool. Enjoy your journey, and we're here to help. We're going to try and offer so many resources for you that you're going to be educated and armed and equipped so that you can figure out which way is up in these energy markets. Because one thing is for sure, it is always changing. So anyway, drop us a line, let us know, drop us a like, drop us a comment, and really looking forward to seeing you inside. But I think that's all. That's all I got.
That's
You
all we
got
got.
any more?
That's all we got for today. No, that's it, man. If I get any smarter, I don't know what to do.
All right, folks. Hey, listen, thanks so much, and we'll talk soon.